Hello and welcome. This is Real Estate Beyond the Sign. I am Lindsay Carducci, and today I have a special guest with me. This is Mr. Jeff Names with Cross Country Mortgage. I have known Jeff for, gosh, I don't even know how many years.
Probably a little around 10 years, I think now.
Okay. That lines up with about how long I've been licensed. So that makes sense.
That's about when I joined the Medina Board of Realtors.
Yes, yes. So I would love if you could just give a little introduction of yourself. Obviously, I just said your name, but where you're from, what you do, all of that good stuff. And it doesn't just have to be work related, because I know you have some very important other roles as dad and husband. So tell me about yourself.
Well, thank you very much, Lindsay. And first of all, I want to congratulate you. As I arrived to your office today, you had some news that you were sharing. So, I mean, I really need to defer to you on that. But I am very excited for the Carducci sales team and McDowell Homes for a recent addition that they have.
Yes, and we might I might have to like leave it a mystery in this video and tell everyone go to my page and find the most recent video and you will see who the newest team member is. Lucky number 20. And yes, very special. We are super excited to have this person. So go check out the video and see who it is. I'll have to have this mystery guest as or mystery team member as a guest here very soon.
I'm sure she'll fit in just fine.
Yes. I think I might be able to squeeze her in. We'll see.
Well, thank you very much for the introduction.
Yes.
Hi, everybody. My name is Jeff Names. I am a mortgage advisor with Cross Country Mortgage. Cross Country Mortgage is headquartered in downtown Cleveland, and I live in Medina, about 45 minutes south. And I have been a mortgage advisor since 2002. And I have a team, and we focus on helping people with their purchases and their refinances to help achieve the dream of homeownership.
I love that. I love that very much. And we have been partnered in business for many, many years. You have helped many friends, many clients of all ages, of all everything. And I know along the way, you have learned a lot. I have learned a lot. I'm still learning. We all learn every day in this industry, right?
That's for sure.
I know there's so many things I want to talk about, but we'll see what we can actually get to today.
Okay.
I would love to, if you are open to it, talk about maybe reverse mortgages at some point, because this is something that you and I recently talked about. I've attended courses that you've taught on this, and I feel like sometimes a little ashamed to admit this, we don't fully understand things until we're in the moment. And so, there was recently I had come to you with a client who I felt like this might, really work for. So we might get to that in a little bit, but
I think I'll be able to work it in somehow.
Okay. Perfect. So you said 2002 is when you got started as a mortgage advisor, which that's amazing. So that's 24 years.
Yeah.
That's really awesome. I mean, that's great. I was thinking 2002, I was still trying to figure out what the heck I wanted to do in life. I think I was a senior. So, no, but that's amazing. That's obviously years and years of experience. And we've been working together for a while, obviously, but we have a great partnership between Cross Country and McDowell. So we kind of like really came together again, which is amazing. Tell me something that, might be a good learning point for somebody as far as like the mortgage world or, just anything, that somebody could take away from this and really learn it. And usually I feel like that's done through stories, right?
It typically it can be, yes, for sure.
Short storytelling is like my favorite way of educating, so we've had a million transactions lately. So is there any specific ones that you would like to share that you think might help?
Yeah, most definitely. So to your first question was kind of how did I get into the business?
Yeah.
And it happened by accident, actually. I was working, my first job out of college was I was set up to be a financial planner at a company. And I did that for about 6 months, and I was broke. I was 21 years old, and it didn't make sense for me being in that situation to be giving financial advice to anybody. It just didn't compute my head. So I very quickly I had to find a job, and I became a bill collector and did that for maybe 6 months or so. And one day I got very lucky and I had a big score, but it was a loan officer who was calling to negotiate a settlement for one of their clients. And it intrigued me, and I ended up getting an interview at that company, and they didn't hire me, or at the loan officer's mortgage company. They didn't hire me. They said they didn't have enough room, but they ended up referring me to another mortgage company, which sounds kind of odd, where you don't accept a recruit, but you refer them to somebody else.
Yeah.
In real estate.
Well, honestly, I've heard that a lot as far as real estate agents, if they're seeking a certain team that maybe doesn't hire new agents. So they'll say, hey, go learn from this person for a year. And then when you have a few transactions under your belt, come back. So
that's perfect. Actually, that's what happened to me.
Yeah.
So I got a couple of days after that rejection, I received a phone call from a gentleman who had a different business model, which was more salary plus commission. And I actually met with a fraternity brother, a friend of mine, who I heard did mortgages, to rehearse for that new interview.
Yeah.
I ended up getting the job with the salary position, but behind the scenes that I didn't know about, my fraternity brother was working on opening up his own mortgage company. And
very nice.
so once he got that undergoing, it was kind of hard he was very convincing that I could handle straight commission, I guess is a good way of putting it.
Yeah. Because it's a scary world. I mean, I was not necessarily a salaried employee prior. At some companies I was, but I was always like tip based for a very long time when I was in the service industry. And that's also, you don't know, if the next day the restaurant's going to be open and, you're going to be able to make money. So it's a scary thing, and still scary in real estate. We say that we wake up every day jobless, essentially, because you need to go find the next job. So it can be scary.
It can be scary, but it can also push you.
Yes.
It can also build character.
Yeah.
It'll also force you to be resourceful.
Yeah.
And it can create lots of great positive work ethics. And then when you combine all of that with systems and teams and with the mindset of you're out there trying to help people accomplish what they're looking for, I'm very grateful every day that we get to do this for a living.
Yes.
Working alongside different realtors and different teams, and everything set up in an organized fashion with the common goal. It's just something that means a lot to me, and I'm very grateful to be able to do it.
Yeah, absolutely. And Melissa Hudson from our team, she had chimed in a few minutes ago and she said, a happy accident. I don't know if that's what she meant about, the us coming together again in life. But, but yeah, so that's awesome. So continue. I'm sorry.
Oh, that's all right. No, so you wanted to talk about, well, yes.
No, go ahead.
So one of the things that in the beginning of my career, from 2002 to 2015, the people that I worked with, all we did was refinance mortgages.
Okay.
We didn't even mess around with purchases, just because that's not what we were building. We were a different business model, and help people in different ways.
And different time period.
Yes,
too. So
definitely a different time period. The in that time was the crash of 2008.
Yeah.
And that was a hard time for a lot of people in real estate,
Yes,
because
yeah.
and some people got out of real estate, but the people who really stuck with it, what they ended up doing was sharpening their skills,
Yeah.
getting better, continuously helping people, and then eventually, for me at least, in 2015, that's when I joined Cross Country with Tony Dobbert, and I joined a team of purchase-oriented loan officers.
Mm-hmm.
And for me, that changed everything, because I changed how how the saying goes, you change one thing and that could have a domino effect and create
Mm-hmm.
new different habits.
Yeah.
That's really what happened to me. And as I got better at certain skills, then I started to want to build my own team. And that became the addition of Aaron May. And then we have Trenton and Cindy and Keith, and we built together. And Aaron is doing a spectacular job with the role that he's in, which frees up time for me to specialize in things I want to do. And it's great to be able to do all of that under the guidance of Tony Dobbert and Shannon Lauer and the whole Dobbert team under Cross Country. It's something that's been in the works for a long time.
Yeah.
And now we really get to all learn and grow together at in going up in different levels for sure.
Yeah, absolutely. And, prior to myself joining McDowell, which was just over 2 years ago, just transparency, I didn't know who this Tony Dobbert guy was, but I heard his name 100 times. And Jeff, my husband, obviously speaks extremely high of Tony. So when I heard, that you had kind of come back around and, we're back at Cross Country with Tony, it was just perfect timing, because
it really was.
I don't even know the timeline exactly. I can't quite remember, but I just remember that I joined McDowell and I learned, of their partnership, and it was right around the time. And I was like, okay, well, maybe I can still work with Jeff, because it was scary, to be quite honest.
Well, do you remember when you guys first met? You and I were at the comedy show.
You and I first met, or Jeff and I? Oh, yeah.
You and Jeff first met. That was the same time. And I'm not sure how.
Oh, yes, that's right.
When Aaron and I were making some adjustments.
Yes.
So it was great. It was great. I think the best way to sum it up, it was awesome to have you and Jeff over for dinner that night, so I could really get to know Jeff and learning his history with Tony as well.
Yes. I like to say, I don't know the true definition of it, but the term synchronicity, where basically like things just come together and happen like as they should, and the universe kind of puts it, in your face. Yeah, so I feel like that's kind of what that moment was.
That was pretty cool. It was an alignment that none of us could have actually planned.
No.
4 or 5 years. You couldn't have planned it differently.
No. So no, that was perfect. For me personally, it's always scary joining a new brokerage, doing something different. It's the unknown. So the fact that I was able to just kind of continue my business and work with you, who I had already been working with, it was just seamless. So awesome. Okay. We talked about kind of how you got into the business. So you said 26, I forget how many years you said. I'm sorry.
Yeah.
So
it's up there. Yeah.
So were you doing anything prior to that, or was that kind of like your career path?
That was my career path.
I love it.
When I got out of college, I was like, oh, get a job. And basically I got that financial planner job because in my opinion, I looked good in a suit at that time.
Yeah.
And that was it. And I didn't have an authentic feeling about it, because it didn't feel right to be someone who hadn't created wealth or anything like that, trying to give people advice.
Yeah.
So after
I felt like that in real estate too,
Mhm.
honestly, because I wasn't a homeowner,
Mhm.
but I'm selling people houses,
Mhm.
and it's almost like you feel like you don't belong there. It's that I'm
The
not going to
fear
be
of
able
the
to.
other people fear what they don't understand.
Yes.
I love that you just brought that up that way. And because that actually really extends to the approach that we take on uh, providing the experience for our clients. So, like for example, if you have someone that wants to get pre-approved, that's first of all excellent. Our approach is, I think, a little bit. It might be a little bit. I can't speak for other loan officers or other companies or anything like
Sure.
that, but our approach is more of a, if we can get you pre-approved now, great, we will.
Hmm.
But even if we can't, I'm going to show you what you currently have going on, learn about what your goals and objectives are and what you want to accomplish, and then we can actually put together a plan to
Yes.
help you get to that goal. So it might not be, yes, you're pre-approved right now and you'll be in a house in 30 or 45 days. It might be it's going to take 3 or 4 months to essentially get any sort of ducks in a row that need to be gotten in a row.
Yes.
And then for some people, it might take a little bit longer. But the thing that I really enjoy about our team is that we're transparent
Hmm.
and we can give great sound advice to help people identify what needs to either be improved on with it. Maybe it's a credit thing or an income issue. We can actually show people what it would take to get where they want to be. And the one thing that I would stress for any lender or when they're pre-approving someone is really try to identify what that client's ideal payment is. Not be
Yes.
judged on. I think a lot of loan officers are judged by the people who say, well, how much can you get me pre-approved for?
Yes.
And I have a completely different approach to that. I like to look at it like, how much are you spending per month right now in rent? And what would be your ideal monthly payment? Are you
Yes.
looking to save money compared to where you were paying in rent? Are you looking to spend more money per month? And then manage those expectations alongside with the realtor so that way the buyer knows how much house they should be looking for to match up with what their ideal payment would be, because ultimately when it comes to your home or your mortgage, that's going to be your largest expense every month.
Hmm.
We want to make sure it's matching up with the lifestyle that you want to have.
Yes. I love that so much. And, the role that I'm in with the team is training a lot of the
Mhm.
new agents. And I think a lot of times when you first get in this industry, you tend to have first time home buyers naturally gravitate towards
Mhm.
you, because they just find out that, you're selling real estate. And so then they start inquiring. And what you had mentioned about getting people on the path, even if it may not be in the cards right now, is so important because I always try and stress to people, or if I talk to somebody who thinks they have work to do or thinks, I got to repair my credit, I always
Mhm.
tell them, I'm like, okay, I know you think it's maybe too early, but it's not.
Yeah.
And I want to get you connected now. And I literally always say, I'm like, the lenders that I'm partnered with are going to help you get in a position. So in however many days it takes,
Mhm.
30, 60, 90, 6 months, a year, whatever it takes, they're going to work with you to get you in a position, So obviously the stars have to align with other things as far as job, income, all of that sort of stuff. But you guys are so good at hand holding and helping people get to where they need to be and meeting people where they are.
Well,
So
thank you. I appreciate that very much.
yeah. And, it's just so important, I think, because as I'm sure you know, in this industry, there are plenty of loan officers who just don't take that much time and effort. They'll just say, like, no, you can't get approved.
Uh,
Or they'll approve you for 500,000 when maybe you're not comfortable with a
yeah.
$500,000 payment. So,
I actually had someone yesterday who told me that the property that they wanted, the loan officer couldn't do because the loan amount wasn't high enough for them. I know. It was crazy
wow.
to me.
Wow.
I was just, it was astonishing to hear that. But I mean,
Well, I
again,
suppose you have transactional loan officers just like you have transactional realtors who, aren't necessarily caring about the relationships. They just want to stack numbers. I guess it's everywhere, right?
it could be,
Not us.
not us. No,
Not us.
our business model has always been, well, for me, I've always been a self-generating solely producer.
Yeah.
So every client to me isn't just that client, but it's the referrals too
Yeah.
after that.
Yes.
And because that's how the brand got built. And it comes back down to creating a great experience, giving complete transparency, and really good, honest information.
Yes.
I think there's so much information overload out there with Google and ChatGPT, all the things.
Yeah.
But I think you really need a one-on-one approach, speaking with a mortgage advisor that's actually going to take the time to have a good conversation about learning about your goals and objectives. Learning what your current situation is, to that way be able to then prescribe a solution that's going to fit those needs. And for our team, our clients, a perfect example is our clients that we were doing purchases for in 2022 and 23 and 24, even 25, when rates were higher after COVID and all the inflation and all that stuff going on, we were already coaching them that, hey, once rates start to come back down,
Yes.
we're going to be doing a lot of refinances for these people.
Yeah.
And right now, as rates have started to come back down, here we are doing refinances and helping these people we helped them with their short-term goal of getting into a house. Now we're helping them with the long-term goal of getting that payment as manageable as possible for their family's needs.
Yep.
And at the same time, because we have systems in place to be able to handle that and the support, it doesn't take away anything from still being able to do purchases with our referral partners and realtors, which is, that's a delicate thing to balance as a mortgage company or loan officer, let alone an entire mortgage company.
Yeah.
But it's special when you have different teams set up to be able to accommodate that sort of thing.
Yes, absolutely. I love that. So let's talk about a couple things. So I want you to share a story in just a minute.
Okay.
First, let's pretend like our audience is some first-time home buyers, because I think we will have some that are listening in here. What are some tips or tricks or tools that you could share for first-time home buyers? Because I think one of the common myths with buying a home is that you have to have 20% down.
Okay, not true.
Thank you. And so a lot of people think, I don't have a ton of money sitting in the bank, so I'm never going to be able to be a homeowner. So obviously you and I know that you don't need 20%. But what is like a couple tips maybe you could give somebody if they are thinking about, other than calling you? Obviously we know that that's essentially step one, but maybe things they could start to get together or things they should avoid, things like that.
All right, well, I will take you through the whole process.
Okay.
From start to closing, basically.
Okay.
So to show you for that first-time home buyer what it can look like. And the first thing that a potential first-time home buyer should do is congratulate themselves for at least taking a chance to see what's available and to just try to learn. That I think is the best approach. So what would happen is, say a first-time home buyer calls me, I answer the phone, and I'm going to spend a good 20 minutes to a half an hour just gathering information about what their current situation is and where they're at and what they'd like in their life. So I have to have some certain pieces of information based on how much they're spending in rent, what their ideal payment would be, their employment information, their family situation, and there's a bunch of other stuff. But it's a conversation that we have.
Kind of like a discovery call.
Perfect. Yes, exactly.
Like you're
Mhm.
gathering information, because I think a lot of that people don't think about, like all the nuances, like we need to know kind of the lifestyle you lead
Yeah.
to see if this is going to fit in with that.
Mhm.
So I like that. Okay. So then
the next thing I'm going to do is take a look at the credit
Mhm.
and actually go over the credit report with the buyer.
Mhm.
This is an extremely important step because in today's modern age, first of all, credit is so important and it's not really taught that often.
Yep.
So this is a huge opportunity. I mean, take it from me. I've only been looking at credit reports every day forever, to the point where we will actually help people with certain little things to make their score, help their scores get a little bit better,
Yep.
And also to protect their credit. So, and that can mean the difference between a first-time home buyer qualifying for a loan where they have to come up with a larger down payment or being able to obtain down payment assistance. These things are extremely crucial in that discovery process, as you
Yep.
mentioned. So, and also to make sure, I can also show little tips and tricks that they can do with their credit, or if they're good to go, we have their credit report. We're able to issue a pre-approval. We're able to do that right then and there. Now, if it is someone who does require, like you mentioned, some time to get certain things in a row, then we'll put the time in and put together an actual plan. So now they know what to do.
Yes.
And that's a huge part of the process.
Yes. And I think that's really important just to talk about for a minute, because a lot of times I get calls from people and they're like, well, I have this loan and this thing and, whatever their situation is. And so they have just assumed that they can't buy, oh, my credit score is bad, or, but so like, for example, the credit score thing, 9 times out of 10, what the consumer is seeing as far as their credit report, usually I would say it's probably on Credit Karma or something like that. Not always, but a lot of times, and that's not always the most accurate.
No.
And so I think, we form these opinions of what we think we can do or can't do, but it's so important to reach out to somebody like Jeff who can look at the facts and help you come up with a game plan and get all of the accurate information instead of, relying on what could potentially not be the most accurate source. So
that's a great point. And when it comes to credit scores too, there's no cut and dry credit score like says that you need to have this credit score to be able to do this or this to be able to do that. There are many different compensating factors that come into play. Just everybody's going to have a unique situation. I could list off every single one of them right now, but that would just be a long list of things that wouldn't really apply to everything. And that's what makes real estate so much fun, in my opinion, is because everyone has their own unique story, their own unique situation, and it requires that attention to detail, especially as technology continues to innovate and do all the stuff that it does. When it comes to a mortgage, you really should kind of take that a little bit slower. Really, that's why it should take, 20 to 30 days to get your loan done. It's not like you're going to a store and picking out a TV.
Yes.
You really want to get an idea for how much you can afford, how much you want to afford, and then work alongside that real estate agent to get to the get under contract, which is really the next step along the process. Because once we have you pre-approved, then you're out looking at houses with your realtor, getting under contract, and then for the next 20 to 30 days, my team and we are going to be processing and underwriting your file with your income documents and getting the appraisal done, getting the title work done, and setting up your homeowner's insurance. So that way, when you get to closing day, everything's ready to go for you to get your keys and start the next chapter of your life.
I love it. I love it. And although it sounds simple as we're explaining it, it isn't.
It can be trying at times.
It can. So that'll bring me to like my next question. And I'll be honest, Jeff, I think we're going to have multiple sessions of you coming and chatting with us because your wealth of knowledge. And I think there's a lot of important things to talk about in the loan world and just educating consumers. So let's talk about, sorry.
Do you want to do reverse?
We either that, or if you had something other like that you felt was a really good share. I just think like we were talking about storytelling, is the best way to like learn and educate people. So if there is
three.
Okay. All right. So share one of those with us.
So I've got 3 good stories that are pretty quick that I'll share. One was a loan that we closed I think maybe about 2 months ago. Yeah, it was right around Christmas. The fellow was 22 years old.
That's amazing.
Yeah, especially because if you think about it right now, the average age of a first-time home buyer.
Wait, let me guess. I'm going to say like 36.
40.
40. I was close. Okay.
And the reason for that is the higher interest rates and the higher price value homes.
Mm-hmm.
Essentially, we're all competing with the same thing. Everybody.
Yeah.
We're all competing with affordable housing, whether you pay rent to a landlord every month or you pay a mortgage every month.
Yep.
Either way, we are competing with affordable housing. The difference is if you're a homeowner, you're actually creating wealth creation along the way.
Yes.
Really, that's a very important distinction. So when you're looking at your month-to-month expenses, your rent is probably going to be right up there at the most expensive, and we want to replace that with a mortgage.
Yep.
Okay. So this young first-time homebuyer, 22 years old, has been at his job for at least 2 years, which is excellent, but had no credit. And the reason he had no credit is because no one taught him about credit. And this is something that I take a lot of pride in, especially with first-time home buyers, is it's an opportunity for me to show them how credit works so that way they can use it to their advantage in the future. This will help them to obtain favorable interest rates on credit cards or car loans or whatever type of any sort of debt that they might have over time. So there's 3 types of credit. There's bad credit, no credit, and good credit. And there is a distinction between no credit and bad credit. With no credit, you can still become a homeowner. There are different ways to qualify, and that's something for a unique situation. But at the end of the day, that person with no credit was able to get into his home as a 22-year-old first-time homebuyer with nothing out of pocket.
I think I remember hearing you tell me about this because I remember the no credit thing. That's what really stuck out. And I was just like, but how?
I would have to tell you more.
Yes.
I'm not sure you don't go into it today.
No. You don't have to. But I was just like, wow. But so that's just like the part of the amazingness that is real estate and the mortgage world. You can make what may seem like the impossible happen. So I love that.
That's one of my favorite reasons we get to do this for a living. It seriously is life-changing. Once we understand, like you said, the stories of what each person's going through. Only in order for us to be able to help people get what they want, we have to have the information.
Yep.
There is no way around it.
Yep.
Back in the early 2000s, you used to need you need 3 things to buy a home. 3: income, equity, and credit. They come in different forms. Back in the 2000s, you could get away with just having 2 out of 3 of those things.
Yes.
But that also created a whole different environment.
Yes.
Got to the crash and stuff, and mortgage reform happened. For all good reasons. Lots of different positive changes happened. And now we can do things like what we just talked about. Another success story I would like to share would be on a reverse mortgage. This is one that we did. That closed in December as well. It was a couple that they were both in their 70s, and didn't have any debt or anything like that, and had a lot of equity in their home. However, the wife was stay at home collecting Social Security, and the husband was working at an auto parts store 40 to 50 hours a week, and was also doing DoorDash in the evenings to make ends meet.
Oh, wow.
So meanwhile, in their later years, they're not enjoying their times
Right.
together because he's
Right.
always at work
Yeah.
and trying to make ends meet. So I met with them a few times to show them what a reverse mortgage would be able to do for them. At the end of the day, they now have a reverse mortgage. He does not have to work 40 hours a week anymore. He actually chooses to just work 20 hours a week, and they don't have a mortgage payment and won't for the rest of their lives. That changed their life so much. And I'll never forget that initial phone call from him because I loved how open and honest he was. He's like, I don't know what to do. Do I refinance?
Yeah.
Do I get a home equity line? What do I do?
Yeah.
And I learned about that he didn't want to sell his house. They wanted to continue to live where they were living. So they didn't want to downsize or make a big change like that. So we looked into more financially favorable ways for them to be able to live their best life.
I love that.
Let's see, who would be another good story? Well, here, all right, here's the one. This is a loan actually just got a clear to close on about an hour ago.
Oh yeah, you got here and you were so happy. I love that. I feel like we all, that joy will never go away. I don't know if you remember that little Giphy that I made, but it's like clear to close.
Yeah, those are my three favorite words.
And I think anybody in real estate, it's definitely favorite words. So tell us about that one.
So this is a unique one where a single mom had moved up here to Ohio from Florida, and she was pre-approved with another lender. And unfortunately, they had a 30-day contract from when the close date was supposed to be. About halfway through, that other lender denied her loan. Well, after
halfway through the transaction?
Yes.
So, and I'm sorry to interrupt you. So do you think, like, to me, that would just tell me he didn't gather enough information up front? Obviously we can't say what exactly happened.
They didn't utilize part of her income that they could have. They didn't do it correctly.
Okay.
Yeah.
Okay. So they just didn't choose Jeff names.
they did.
But they got to him, and that's what matters.
Yeah, it was a Saturday afternoon. The buying agent called me and asked if I could try to save the deal.
Day.
Yeah. And by Monday I had it figured out, and Sunday I spent time getting some documentation, wanted to get clarification to make sure that we could do it.
Yeah.
And we could. And it was a matter of just going through the process. We did have to extend it by a few days because there was a hurdle to overcome on the appraisal, but that's part of, it's either that or the deal didn't get done.
Yeah.
And the buyer is thrilled and just can't believe that it actually happened. So now she gets to be reunited with her family. And there's a whole bunch of other awesome stuff that happened because of it. But those are three good ones. Last night's a fun one too, actually. Do you want me to tell you about that one?
Yeah. I mean, it's really quick before you tell that story. I think, I'm sure you feel this way, but it's just a very rewarding career that, is extremely fulfilling. Being able to, we're different aspects of the real estate transaction, but essentially we both help people get into homes and, very much so change their lives. So it's extremely fulfilling and rewarding. So, okay, last night's story.
Last night's story. A friend of yours you had mentioned might want to look into a house for their son. And it was because of a post that you had. And this was someone who...
Social media pays off, people.
Learning. Let's see. So what started at one conversation ended up turning into the father's son actually now wants to buy a house. So we were talking about one thing, and now it changed into the son wants to buy a house, which I think will be spectacular for him.
Mhm.
And the thing that's fun is we're taking it from that approach that we talked about earlier, which really opened up the son's eyes, because he was afraid. He seriously was afraid that, well, if you're just going to try to pre-approve me for as much as possible, I'm like, no, that's not
Right.
it at
That's
all.
not the goal.
No,
Yeah.
that's one of my biggest pet peeves of the industry is, like I mentioned earlier, is when people sometimes will judge a loan officer by how much did you pre-approve me for, or
Yeah.
how much can you pre-approve me for?
Right. Right.
And if you're really pushing the envelope to see how much, it's good to know how much house you can buy.
Sure. Mhm.
You know, but it's also an understanding and it's a lesson in perspective of how much house do you actually want to afford.
Yes. Yes.
And that when you wrap your head around that, especially as a first-time home buyer, or even if you own multiple homes, it's all about where you are at in life, of where you look at where you're at presently, and if it's where you want to be, great. If you want to make some improvements on it or make adjustments, whether it's renting and you want to lower your rent by owning a home, definitely a way to do that. One of my favorite things about that too, by the way, and I'm sure people who rent realize this, like, you have zero control over your rent.
Yeah.
Your landlord can raise your rent, or with a mortgage, you have complete control over your monthly payment. And that's just something that can help you to plan other things in your life.
Yep. Absolutely. And we have Mr. Carducci jumping in the comments. Oh my God, I know him, but he spelled your name.
No, actually, I've always spelled it with a G. You guys have all got it wrong all these years.
And a PH.
Yeah, I'm a G all three.
That's funny. All right. Well, like I said, I'm probably going to have you come back as a guest again, because you're just a wealth of knowledge. I feel like we have a lot we could talk about. And maybe we'll kind of, if you're up to it, come up with like a mortgage session, where
absolutely.
we could just talk about that aspect of things.
Totally can.
As we wrap up here, two things.
Mhm.
Where can people find you? And also any final advice for our listeners?
Okay. Well, again, Lindsay, thank you so much for having me.
Absolutely.
Very excited for you and Jeff and Carducci team and
Thank
McDowell
you.
team for what's been going on. It's just blows my mind all the time.
Thank you. We're very excited too. We're blessed to be with McDowell, honestly. They provide many, many, many opportunities, and we're just very grateful. So,
So my phone number is 216-509-5277. That is my cell. It's always the best way to reach me.
Perfect.
Or if you want to also email me, I can be reached at Jeffrey, Jeffrey, .names.
Not GE.
Not GE. No. Jeffrey.names@ccm.com.
Perfect. And
last tip.
Oh, yes. Final advice.
The final advice is it doesn't cost anything but a few minutes of your time to make the phone call, find out, and just to gather some information.
Yes, absolutely. And we got more fans of yours jumping in the comments. I know him too. Everyone's a big Jeff Names fan. So, yes, if you have any mortgage related questions, Jeff is your man. Give him a call. And I look forward to having you back on the podcast again.
Absolutely. And
Thank you for
congratulations on the
joining.
podcast. This is awesome.
Thank you. Now we got to all jump over to our social medias and take a look and see who the new joiner is.
Gosh, I wonder who it is.
All right. Thank you so much, Jeff. I hope you guys all have a great day, and we will see you next time. Peace out.